We want people to manage their risk accordingly. Now, of course, there's random events that happen that change things. It could be something random come along and change things. But at the end of the day, you've got to have some perception of what the market is likely to be doing to get your ducks in a row. You cannot put your head in the sand. There's been a period now for the last 4 to 5 years since the turning of the drought, and especially since Russia-Ukraine war, where there's been a lot of euphoria into agriculture. It's been wonderful, to be honest with you, to be part of it. It's been so euphoric, and everyone's been really positive, and it's great to see lots of young people coming back to farms and see a lot of expansion. The accelerated depreciation allowed people to improve their equipment, and it's been a really positive time. But the thing is the carryover of that, the impacts of that are now going to draw us out for a fair period, and we just need everybody to have their heads locked in.
Welcome to the Profitable Farmer podcast, where we share stories and tips to help you run a better farming business and create your very own freedom farm. If you're looking to work smarter and not harder in your farm business, welcome. You're in the right place. G'day, I hope this finds you incredibly well as we get set for spring, and for many it's been off the back of a tough 2024 and a very lean autumn break, to say the least. Certainly been the case for us here at Cootamundra. I thought it appropriate that we do a bit of an around the ground over the next few episodes and check in with commodity experts across grains, red meat, wool, and we might try and find someone in dairy just to get a sense of what's happening out there in the broader national and global markets. About 3 years ago, I interviewed Brett Stevenson, who's the founder and managing director of Market Check, a grain marketing advisory firm servicing broadacre farmers based in the eastern cropping zone of Australia, from South Australia's Eyre Peninsula through to the plains of southern Queensland. Their business, which was founded in 1994, has grown to become Australia's largest grain marketing company. 3 years ago, Brett shared some really significant insights on how he felt the landscape was going to play and the headwinds that were facing grain growers across Australia. And back then, his narrative was optimistic and quite buoyant. But I asked him to give us his take on the outlook and the headwinds that grain growers might be facing over the next 3 to 5 years, and it's a very different story. And I think Brett's not sharing this to be negative or alarmist. He's doing it because he deeply cares about the success of farming families, and he wants us all to be incredibly prepared. And so there's a very clear message from Brett in this episode about the grains markets and what's playing out globally. And in summary, it's bunker down and get ready for what's coming. We've had a period of real optimism and high prices, and that means that in time we have to come back to a reality of below average prices. And so, Brett, I really appreciate the work that Market Check does. We advocate for you, and I'm really grateful for your time once again and your outlook on how things are going to play out in the grain sector nationally and globally. Brett, it's been a little while, but it's wonderful to have you joining us again on the Profitable Farmer podcast. Thanks so much for your time.
No problem, Jeremy. Lovely to be back.
And great to see you. How are you?
Yeah, I'm pretty good. Thank you. Very good. I've aged a little bit since last time because it's been a number of years. And boy, hasn't a lot happened in that period. So, yeah, we're not going to review it all, but there's been plenty go on in the world and certainly plenty go on in the grain markets.
So it's been an interesting last 18 months for so many grain growers. Brett, I'm sure you'll agree. And we find ourselves coming into spring now. I just feel like this is perfect timing. Would you mind just giving us your first key insight, perhaps, as to what you're seeing playing out in the global grains market?
Yeah, I think, well, to me, it's pretty obvious now, given all the information I've got within my head, that low prices are going to be here for some time. There's long-term downward pressure on grain prices internationally for a number of reasons, which I can expand. That, as well as combined with the fact that fertilizer prices and input prices are under upward pressure at the same time as we've got downward pressure on the grain prices. So now, from most of your growers listening, they'll go, "Oh my God, you can't tell me that these input prices could be sustained while I've got output prices like this, because I need high grain prices to warrant those input prices, and if we don't get them, then it's pretty gloomy outlook." But that's the reality of the situation at the moment. I can explain more fully as to why I'm saying that.
Well, I think that's a key headline comment that we can unpack almost for the rest of this podcast episode, Brett. But, we've been talking about at Farm Owners Academy that we're growing commodities, and by definition, when we've had a period of above average and high prices, that we've got to return to the mean. Commodities and pricing of commodities is cyclical in nature. So I think what you're saying is, on the back of a period of really positive years, we're going to see probably a correction that maybe we should have expected.
Yeah, there's an old saying in commodities and markets that high prices kill high prices, or high prices solve high prices. You can say it however you like. But yeah, there's been a number of key things happen as a result of the Russia invading Ukraine. Number one wheat producer in the world invading the number 5 wheat producer, which is causing some long-term after effect. Look, I hope we don't look back at this era from 2020 through to, in terms of production and pricing, from 2020 through to 24 crop year, and go, gee, they were boom years. I hope, like a lot of growers have thought, that we've just gone into a new era. I hope we have gone a new era. I hope I'm completely wrong. But some of the evidence is pretty clear, and I'll just give a few examples of that. First is the fact that high prices, as high as they got after February 22, wheat prices getting to $600 a tonne internationally, even though we didn't see that here because the ports were choked trying to get the big crop out. We still got very high prices, 400s plus. Scare the life out of all the importing nations. And for two reasons. Firstly, just the sheer cost of food, and inputs for their economies. And the second thing is the fear that geopolitically, that they might not be able to get supply, that those wars might expand and cause real problems in logistics of actually receiving commodity from the supply countries, from the exporting countries themselves, that might be affected. And when they're 1 in 5 in the world, that's significant. So what we've seen in China in particular, let's pick one out, has been a big change in their approach to imports. They wanted to protect their domestic economy from such large impact from outside. They're very exposed to importing of wheat, cotton, soybeans in particular. And what happened was, in 2017, China Chem, which is the state chemical, sort of agricultural chemical company, bought Syngenta Agriculture, which is a big Swiss-based sort of GM, agricultural chemical company. They paid $43 billion for it. It was a huge transaction, one of the biggest in China up to that date. And the idea was to use that. They didn't have GM crops in China, was to use that as a leveraging point to start introducing genetically modified crops to China from their own owned company. Now, that was a slow burn thing because they were just gradually working out, didn't want to have negative impacts from it. But as a result of February 22, they've advanced that whole regime significantly. They've brought forward a lot of the trials, and they're basically going hammer and tongs to get production up. Now, the result of that, just for instance, to give you one crop, for instance, is corn, because corn has got a lot of genetic success, and they're going to produce 300 million tonnes of corn this year. they're forecasting to produce up to 325 by the next sort of 8 or 9 years. Doesn't sound like a lot to us because we think, oh, well, 300 million, America produces 500. But potentially China could go into an exportable surplus for corn. It won't go to an export. They've got similar projections happening in wheat and soybeans. And so they are jump shifting from old varieties of these grains into not only new varieties but genetically modified varieties, and its potential to increase production is significant. Now, what that means, of course, is they're not going to import as much, and it's been noticeable, as you probably guys are listening in, that China's been fairly absent from the market. They've just been buying some wheat and barley, and they've announced that they're going to buy some canola again from Australia. They've suspended the blackleg restriction on us. But that in itself is something people need to think about. The other thing is, in doing so, and I'll give you another example just as we're going, is India. India also is very exposed to imports, large population, 1.4 billion. They're also trying to expand production internally, and they're trying to use more fertilizer and things and subsidising. So is China subsidising their farmers as well. They've increased the subsidies. So India's doing the same. And from the input side, one of the reasons why inputs are making the point that input prices are having trouble coming down, India recently bought a $2 million, put out a tender for 2 million tonnes, of urea from the world, and bought it from Saudi in the end. But 2 million tonnes of urea is significant in the market. They didn't just take some of it. They took whatever price was offered, they bought the whole 2 million tonnes. So those importing countries are pulling on the supply chain for inputs to try and create production which is competing or reducing the amount of grain that we can export to those countries. So without sort of going into all the microcosms of other import countries that would be doing the same, that's a real concern long term, because we've got to somehow, we've increased acres. I think most growers would notice that we used to be 25, 27 million tonnes. All of a sudden we're producing 40 million tonne crops and 32.5, 33 forecast for this year. We've expanded acres, improved production performance, and and our markets that we're exporting to are full steam ahead on creating their own production. So you've only got to add 1 and 1 on that to get 2. That there's going to be a pretty tough to get upward movement in prices while that's occurring.
Brett, really appreciate that succinct view. I understand that those 2 examples you gave, China and India, are both in population or net population decline as well. So is that another layer to this, that over their next 5 or 10 years, their consumption going to plateau?
Thanks, Jeremy. That is the next instalment, and I know people are going to say, God, this guy's a mega bear. But the reality is China has just last year gone into negative population growth for the first time, I think, in records. They went only 1.5 million people in negative for the year. They're going to continue in negative. The projections are for negative population growth. India is forecast to go into negative population. They're 1.4 billion, mind you, but it's forecast to go to negative population growth in the next 2 to 3 years. We've all, ever since deregulation, we've had the beautiful thing of being close to Southeast Asia, higher populations, more demand, and it was just such a fantastic growth story. And with some supply constrictions caused by the Russia-Ukraine war, whichever way you want to say it, we had this lovely demand base and growing. But with population diminishing in a lot of these Southeast Asian countries already, that's something we've got to think about, because we don't have more people turning up to buy more wheat, barley, canola, So, the population characteristic is important from a perspective of a lot of Southeast Asia. People will know that Japan is forecast by 2050 to be down nearly 45%, something like that, by 2050. It's just extraordinary to imagine in population. And obviously they buy a lot of our high protein wheat for noodles. So Yeah, we've got a few things colliding at the same time, which is problematic for us.
The other key reality I feel at present is what's happening in between Russia and Ukraine, and there's a negotiation. What is it? Tuesday, the 19th of August. There's a significant potential negotiation playing out in coming days. Brett, what does that look like?
Yeah, well, Jeremy, like we're just begging for something positive for the grain markets, to come out that restriction supply, poor seasons or something. And here we've got another one happening right at the moment, given that we're here on the 19th of August. US is trying to broker a peace between Russia and Ukraine. They're meeting with Europeans at the moment and going on to meet with Vladimir Putin from Russia. And that's 1 and 5 coming back together again. So now a lot of production has continued in both those countries, although upset by the disjointed logistics of warfare. They've proved, Ukraine particularly has proved how resilient they are. But if peace was to be resumed, then we've got to expect a much more fluid supply arrangement, and we've got to expect that they could plant more acres and just get more logistics, just the simple logistics of getting seed, fertilizer, everything they need to the farms to plant their full complement of crops has been very, very difficult, and that would be freed up. So we want peace. We all want peace. We don't want to see any more war. It's just, we know, from market check, we know a lot of people in Ukraine and also Russia in the cropping zones, and it's just been heartbreaking to see what's been happening. So we want to see peace. But the trouble is it's coming on top of a lot of other things that have happened as a result of that war. That is just not good for the medium to long term for prices.
One other question, Brett, and then perhaps we can start exploring the implications of this for our Aussie farmers. What has been the US and Canada harvest, and how's their season playing out?
Yeah, well, US is getting closer and closer to completion. Canada sort of well on its way, and the crops have been pretty good, and also in Europe pretty good. No real big issues in the crops so far in the Northern Hemisphere. That's why, for instance, the swap price for wheat for December contract 2025 in Australian dollar terms has been now under $300 a tonne for nearly a week now. Corn is pushing towards $200 a tonne. Boy, oh boy, we haven't seen that for a while. So, those prices are reflecting the fact that they just can't find a reason to rally because the Northern Hemisphere crop has been pretty gentle and nothing really upsetting. And now we're about to move to completion of that Northern Hemisphere crop, and it'll come down to the Southern Hemisphere. As much as it's not as big a deal, we're a small deal, Argentina and us, in terms of the production side and the other side of the world. But that format of prices and that competition of grain that's falling into the world, we're going to run right into it.
And Brett, are Trump's tariffs going to play an impact, do you think?
They're having an unusual impact in that, and so some positives and negatives out of the tariffs. I'll give you a couple of examples. Indonesia has just signed an agreement, everyone would have seen it on the television, with the US to try and get more of their manufactured products into the US, and to sort of grease the wheels of the whole agreement. They've been looking to try and buy more US wheat. US wheat happens to be the cheapest wheat in the world at present. It's leading the charge in terms of the supply meeting the market, the rubber meeting the road. So Indonesia's been looking to try and buy product from them to show efficacy for the fact that they're serious about buying more products from the US to allow them to sell more manufactured products into the US. So now Indonesia's our biggest export market, principally from Western Australia. And if the quality of the product and that sort of thing may not suit everything for them, but if there's a bias towards the US and because of the trade situation, that will wear us down a little bit. At the same time, on a positive note, the Canadians have upset China, and China's cut them off for the time being. And so Canadian canola prices are reeling. And of course, as a result of that, China has all of a sudden changed its stance on Australia and allowed us to be able to import again. So we'll have priority a little bit into China for canola as a result of that trade issue between China and Canada. Nothing to do with the US, mind you. From an international trade point of view, with the whole geopolitical and, all the upsetting and Trump, there are some impacts which are hurting us. There's some impacts that are coming in positive. So we can't just rule out that the trade war and the trade situation with US is going to be negative for us completely. It's not.
Thanks, Brett. And before we come back and look domestically, are there any other key kind of global headwinds or issues that we need to update on or be alert to?
Well, just one of them is trade is now, even with the war settling down a little bit, if you like, but people getting used to it. Trade flows have been pretty strong, and so freight prices have moved up. So something which has gone a bit under the radar, but if people were to look at the Baltic Index, which is a sort of a benchmark for freight prices have moved up in the last bit quite significantly. So they're a little bit of a headwind. I wish I could say something. I want to say something positive, Jeremy, but yeah, that's been a bit of a headwind for the market because we're a long destination, so we need good freight situations to reach. If we're going to compete, which we will need to when we hit harvest, against US wheat and other Black Sea grain as well, although it's a little expensive at the minute, but it'll have to find the market eventually. Then we need good freight rate situations to allow us to be able to price it from Australia to be competitive.
I think, Brett, to your point, leadership's about making predictions on what we think's going to play out and then making sure that our business models are set up to be able to navigate those predictions or those headwinds. I think we're way better off to know what's coming, warts and all, and to have real data and real facts around what might play out for us in our markets than to not know and just hope that things are going to be okay. I mean, this information is so valuable and so important for people to be getting now so that they can start reflecting on their system for next year and their 3 and 5 year rotation and how they might adjust their cost base and so many considerations. And so I think, please don't apologise for this being candid and somewhat negative, but it's realistic, right? And I think it's just giving our listeners the information they need to make meaningful change ahead of time.
Totally agree, Jeremy. I mean, we're a risk management company. We're based on managing risk in the grain prices, and I'm trying to get this message out pretty loud and clear. We want people to manage their risk accordingly. Now, of course, there's random events that happen that change things. It could be something random come along and change things. But at the end of the day, you've got to have some perception of what the market is likely to be doing to get your ducks in a row. You cannot put your head in the sand. There's been a period now for the last 4 to 5 years since the turning of the drought, and especially since Russia-Ukraine war, where there's been a lot of euphoria into agriculture. It's been wonderful, to be honest with you, to be part of it. It's been so euphoric and everyone's been really positive, and it's great to see lots of young people coming back to farms and see a lot of expansion. The accelerated depreciation allowed people to improve their equipment, and it's been a really positive time. But the thing is the carryover of that, the impacts of that are now going to draw us out for a fair period, and we just need everybody to have their heads locked in. I mean, I'll be totally honest with you, there is still a feeling of, oh, gee, surely it'll just go back, surely $1,000 canola, we'll see that. We might. Surely $400 wheat will be back, won't it? And I suppose what I'm just impressing on everybody, it's not only is it not likely this year, it's not likely for a reasonable period of time. So we've just got to make sure everybody's got their organisation in a financial position to make sure they can weather this storm for a while because you and I, we go quite a way back. I've been doing this for 31 years. And, so market check's been through the 90s and, the early 2000s. And a lot of farmer clients, a lot of our members, I've had members have been with, quite a number have been with me for that 30 years. And they've lived through all that period. There's a lot of younger ones that haven't lived through so much of it. And those people know how tough it can get. And so they know what they need to do to make sure they can survive and even potentially perform well in these sorts of periods of low price scenarios.
So, Brett, what is the period in history that you think the older generation should be informing the younger generation of to help get an insight as to what might be coming in your predictions? You mentioned the 90s. Is it the 90s?
I want to think the 90s, Jeremy, because in the 90s we had 93, 94. It's a pretty dry period. But 95, 96 was a very good year. And we had very good production, but low prices, or moderate prices, I suppose you'd say. So we didn't have too much production issue. The early 2000s were bombed by production issues, not just commodity price issues. So we had the 02, 03 drought, 07, 08. So let's not pick that decade because that had no, commodity prices were low, but we had poor production years as well. And it was a grind. It was a real grind. But let's think of maybe the next 10 years being similar to the 90s. And that's a long time ago. That's 25, 30 years ago, really, in a way. It's a long time ago.
It's actually when I came kind of into the industry out of school and uni. And I remember being an analyst for a farm consulting firm, and so much of the narrative was about declining terms of trade and the cost price squeeze. And to be honest, I haven't heard those two phrases for about 15 years, but they were commonplace. We were in a situation where we were fighting against our costs increasing and our income not increasing as quickly as our costs. And that's certainly how I remember the 90s. Brett, would you comment on that for our listeners?
Yes, absolutely. It was a battle because we were improving productivity slowly, though it was a period when direct drill, controlled traffic, tram lining, didn't have GPS back then, were coming into play to try and improve crop performance for the amount of water use efficiency, groundwater that was available. There was quite a lot of innovation happened back in that period because people really needed it to try and increase productivity as a result of the price of grain just not performing enough to overcome the costs involved. And look, Jeremy, I think you're right. I think we're going to see more of that terminology come back. I'm already hearing it. I'm already hearing a lot of guys saying to us, old members of mine, I bumped into a few actually down at the Australian Grain Industry Conference, and they said, gee, this has been a while since we've seen this, where we're going to have a crop, and if it's only an average year, we're possibly going to do the whole year for nothing. And my dad, used to stir me up to say, get out of farming because you go all year and you add it up at the end and there's pretty much the same as where you started. It wasn't very enlightening to have somebody tell you that who'd been farming all their life because he didn't get to see what's happened lately.
Well, I think it was over that period that so many didn't return home to the farm because that was the message we were getting from our mothers and fathers, right?
They hunted us off. They said, don't come back here. It's a waste of time. And then last 4 or 5 years, it's been beautifully the opposite, where they've wanted to come back because the farm has been able to sustain good lifestyles and good returns. And it's been exciting. It's been really exciting. I just at one of our conferences recently, I had 2 different families who had young people come back. And I said, when did you come back? And they said, just 2022 was one, and I think the other one was 23. 2 and 3 years back at the farm. They've been doing a few different things, diesel mechanic and a few different odds and ends. But they've come back because of the excitement, and it's what father would say, don't come back, and what's been happening lately. But my tune to them, which they probably thought, gee, he's a lousy old bloke, Brett Stevenson. I said, you're going to have to learn down to batten down the hatches now, because that's you're going to have to learn to manage the farm, manage your cropping operation in what is a pretty poor return scenario, and work on the fact of just making sure you're still farming when it turns. I know that sounds a bit dire, but we've been through it before, and it does look very similar. The situation we're coming into does look very similar.
So, Brett, really appreciate the straight talk and your honesty. It is greatly appreciated. What's the single message here that you'd like to make sure that our listeners appreciate as they kind of think about their business model for the next few years?
Well, I suppose my world is around the grain marketing world, and so I probably more in that pocket, and there'd be a few different things. I think, like we've noticed that with very high prices, people have been a little bit less focused on the grain marketing because the price has been high enough anyway. They've sort of felt, why do I need to add any value or try and do something to increase my return or even manage my risk? Look, 400, let the whole crop go, this sort of stuff, $1,000 a tonne canola, let the whole crop go, just don't worry about it. And fair enough, I totally agree with it. But when prices are down, you got to try and make every post a winner. So you got to, when opportunities are presented to you, like this year, middle of the year, swap price got to 350 plus. It was an opportunity not to do a lot, but just to do something. And there'll be other little opportunities. And the thing is those little opportunities make a big difference when things are tough. And if you can make an extra $5 a tonne, an extra $10 a tonne here and there, it really adds up along the way. And managing risk is important. You just don't want to get into a sustained downturn like for 2 or 3 months when you're holding a whole heap of stock. Certainly northern New South Wales bothers me. There's a lot of stock up there. A lot of growers sitting there waiting for something to happen. They thought that there'd be a drought in the south that might bail them out, and it did for a little while, but now they're back into the export format. So all these things are driven by the fact of acceptance that we're in this paradigm. And okay, I accept, I've listened to what you've had to say, but I accept that. And what I'm going to do is start formulating my strategy. Talk to, if they're a Market Check member, talk to the advisor, get my marketing system in a manner that I can avoid significant sort of down periods for a period, make sure I'm not too exposed to those, and take little opportunities as they're presented. If there's a way of using your on-farm storage, getting paid carry because a consumer doesn't want to, consumers, you can imagine, in this environment are not exactly in a big hurry to buy all their product for the year. They can see there's a heap of stock around. They can see we've got good production. But they will buy stuff on a carry, and you can sort of get repaid for your storage on a carry. It's not a fact of putting it in there and it makes an extra $50. You might get an extra 10 or 15 just out of the carry. There's all sorts of different things like that. Making sure when there's good bids out there for different grades that are there because of a short exporter short into the port and needs it. Lots and lots of little things, and people will hear this from athletes and stuff, little things that make a big difference when they're put into the whole. And then outside of that, which is not in my world, I'm obviously conscious that people have bought a lot of country, or some people have bought country while the price has been very high, and they're probably going to be sustained. But debt levels, just make sure financially you're in a position where you're not too exposed and put under pressure by a low return from grain for a period, because low return and then poor production, boy, it really puts you under pressure. Obviously, we see some value in just being more tuned into the grain marketing situation in these coming years, and that will pay dividends. And people, I think, probably who've been able to lean back away from it have probably been okay. Well, they have been okay, but now is the time they're going to have to be able to manage all the production, all the harvest and the grain, but lean into the market a bit and make sure that they know what's going on and got themselves organised, got a strategy, got everybody on the farm aware of what's happening, and accept the market situation. Don't sit on grain for a long period hoping another black swan event like Russia invading Ukraine is going to solve the whole world. It's just probability level is too low.
Great comments, Brad. Thank you. And we talk a lot about we need business models that can break even or better in a decile 2 environment, achieve a 25 or 30% net profit in a decile 5 environment, and then be ready to capitalize on, really good prices or good seasons, decile 8, 9 type environment. I guess what you're speaking to is I want to encourage everyone to be doing their budgeting out 1 and 3 and 5 years and really look closely. Perhaps we haven't been looking closely at what a decile 2 price or a decile 3 price environment looks like. Average season decile 2 or 3 prices, can you at least break even? And if you can't, now's the time probably to be reviewing your cost structures. To your point, reviewing the level of expenditure that we have on machinery finance, and reviewing that decision to buy land a few years ago that might have thrown us into a low equity position, and make sure that you've got those constructs in play and able to navigate what might be a decile 2 or a decile 3 pricing environment for the next few years. Is that a fair comment, Brett?
That is absolutely it, Jeremy. That's absolutely it. People have got to understand that we may be in a low price environment for a reasonable period, 2-3 years, maybe longer, who knows. We had a high price environment for 4 years, nearly 5 years. So now maybe we've got a low one for a reasonable period. So yes, you've got to be able to look out and say, look, if this is going to really hurt me, I don't want to wait until there's a whole heap of pain and have to be forced to do something. I want to be on top of my game, and same thing I'm talking about the grain marketing as well. Got on top of my game, look at the total farm business model. And one of the great things that has happened through this period is people have updated their equipment. They've got highly efficient operations from an equipment point of view, got latest equipment, which is fantastic. But if there's anything, if you can look out, like you're saying, out 2, 3, 5 years. I mean, my own business, we plan out 5 years and review each year and keep updating the 5th year all the time. So, and try and think of what else we can do. Same thing is true of a farmer. Yeah, you're right, Jeremy. If you're going to make adjustments, start thinking about how you're going to make them and prepare now. Don't wait until everybody knows in a way and it's upon us. Better to be getting things right and look at ways that you can perform in this environment, because if you can perform in this environment, you can perform anytime.
And if we are in a decile 2 environment, break even could be a great outcome. To your point, it doesn't. If you're achieving that, and you can find ways to move out of a break even situation into a small profit, that it doesn't mean your business model's broken. Quite the opposite. You've got a strong business model, and you just need to ride out this next period until we arrive back into a better pricing environment.
Yes. I think you're dead right. I've been saying to people, banks included, that breaking even this year for a lot of guys, probably apart from the ones that have got a lot of production year on them, is going to be a good result. And so I had that same conversation with those farmers I met down at AGIC in Melbourne. I said, look, if you can get away with your shirt on, it's going to be a good result, because we've got the wave of high input prices coming across a low depression on commodity prices. So let's hope that pressure on the input prices starts to wane as these importing countries soften up their stance of trying to build production so quickly, and we get a bit moderating in that to get a bit more equilibrium in terms of the cost of production. But so yes, I think if in this year, if you've got an average year and you can get away with the shirt on, I think you've done well, to be honest with you. And as long as you've maximised every little thing that you could along the way, that's the best you can do.
If I've been a bit complacent around my marketing because prices have been so good, Brett, what's the discipline or what's the habit that you would recommend for me, given the new environment that we're arriving in? How much time and how much focus should I be giving my marketing, in these next few weeks in the lead up to harvest?
Well, in the next few weeks, everyone needs to be tuned in. They need to be tuned in that if any opportunity comes for anything along the way, and also just taking some action to reduce the risk of potential pressure at harvest time. We've got a carryover of stock, the biggest carryover of stock I've ever seen in Eastern Australia of wheat in a year when we've got depressed prices. 30 years, never seen it. So need to be switched on, but probably, and I think this is good timing because people are starting to switch on already. But you just need to be able to create an ability to be on top of what the market's doing and being open to what's happening, and not just going, well, we're just going to, get it on, get it off, and see what happens, and stick it all in a bin and go with everybody else. Probably the other thing is longer term. I know it's really important to start having a plan in place for what you're doing with your grain marketing, and not just be wandering off and heading to harvest and hoping for a black swan event, because we've had one marvelous in terms of the price environment it's created. It's been terrible from a humanity point of view, but we just can't rely on that happening. So we've got to be more switched on to what the grain markets are doing right through the year, and not just relying on where we get to at harvest and for a few months afterwards.
I reckon that's a great wake-up call to some of us that might have been cruising on this topic over the last few years when prices have been at significant highs. Brett, this is your opportunity. We advocate for Market Check highly, and we feel very values aligned with you and what your team do in how you help your members. Would you mind just describing how Market Check does turn up to your significant and national membership and the sort of advice that you do provide? And then with that, how are people best to learn more and reach out to you if they're interested?
Okay, thanks, Jeremy, for that. We advise clients from southern Queensland right through to the Eyre Peninsula of South Australia, and a couple in Western Australia as well. So we cover the whole grain belt of Eastern Australia. But there's a few different levels for membership of an organisation like ours. There's just becoming a member by itself, and that entitles you to get access to all the information that we provide. And that's by videos, updates every day. We provide an update of what the market's doing every day. We also have an advisory level for people who are experienced and who understand, probably got more time with Market Check, understanding what we do. We've got quite a number of those, and that's more intense. So we help them devise their plans. We monitor their plans. We come up with recommendations. To both classes of membership, we provide an overall strategy of what we think you should be doing and when you should be doing it throughout the year. Some people don't like to sell anything prior to harvest, and that's fine. We advise when we think you should sell some, how you should sell it, whether you should be just hedging. And for a lot of people, they'll say hedging, what's that? But you'd need to probably get to know us better to understand what some of these techniques are. Hedging, or do I forward sell, etc. Basis is a big element of what we use to try and get those little improvements in price. And probably the other element of what we do to Market Check, just standard members or advisory members, we've got an academy, interestingly enough, which is called the Market Check Academy. It's when you join, there's a part of the portal that's got all those videos on all the concepts, right through from as simple as just contracting grain, what that involves, terms and conditions, how you can negotiate contracts, and going right through to the more complex issues of swaps, basis, options, all this sort of stuff. And so there's a whole raft of videos on there from 5 to 10 minutes, not very long because we know people are busy, to try and give you an understanding for the concepts. And then you can come along to the meetings when we hold them in the local area to get more understanding, or you can engage an advisor as a full advisory member to help. So there's all that. Then I'm going to probably labour on here, but we have managed programs where we can manage the grain for our members. There's a whole raft of different strategies you can adopt through those programs. It's not a single strategy. And we have a exchange system where we interact with 700 buyers every day. We pick up something like 7,000 different prices and pick up what's happening both delivered and site markets, so that we can actually run offer boards. We run an offer board every day, and we run tenders as well for the grain. So that's just as a slight sort of shallow overview of what we do, but we've got a very strong client base, and we're actually just at the moment looking to take on some more standard members. Advisory members would be something more we'd have to discuss with anybody who was interested, but we're happy to take on more standard members, which gives you access to make a start get informed, get access to strategy and implement it.
Brett, how do people, if they're interested, get in touch with you? What's the best way for them to connect?
Well, best way probably is to go onto our website, which is marketcheck.com.au, and contact us whichever site. We have an office in Adelaide. We've got one in Wagga Wagga and one in Sydney. You can contact any of the offices there, depending on where you're located. So probably that's the easiest method. Just look up our website and get in touch with us. You'll see us a bit on the socials because we do a little bit of stuff on the socials. But the easiest way to contact us is through the website. So please go and have a look. You can get a better picture of who we are and what we do. As I mentioned, I've been doing this for 31 years, so we've got a lot of clients that have been very happy for a very long time. So we're not a newbie. We've been around for a while, and we've seen these environments, and we've managed our clients through them. So we know what's involved.
I think that's a key point, Brett. And we talk a lot about being really thoughtful about who you have as your key advisors around your business. And, a team like Market Check need to be one of them, especially as we move into this new trading environment for grain growers. Brett, I want to loop back, last conversation point perhaps, but you mentioned that you have some connections with Ukraine farmers and what they've been through has been pretty challenging. Would you be willing to give us an insight as to what it's been like to be a Ukrainian grain grower over the last 3 or 4 years?
I've probably got to say we're not in contact so much with grain growers in those regions. We're in contact with consultants who are agronomists. We talk to them to get a picture of what really is happening on the ground with the crops in those regions. So they're agronomists come farm management consultant type people. I think anybody we had a guy last, 2023 AGIC conference came over who was head of the Grain Industry Association of Ukraine and spoke at the conference. And I think if you could have looked around the audience of all these traders, hard-nosed traders with a tear in their eye, I think we all took on board what the challenges have been, not only trying to farm fields that have got bombs left in them and trying to, they've been so innovative. They've been so resilient to grind their way through this situation. It's been amazing. The farmers in the world can be proud of those guys over there, what they have done. They've been brilliant. But so I don't have so much of an insight into the farmers apart from what we hear from those guys that are located over there. And look, it's been dreadful. And one of the interesting asides, just talking about that for a second, we now, through the satellites of which we use to look, there was a satellite which showed the cropping areas on both the Donetsk-Luhansk side of Ukraine and on the Kiev side of Ukraine of the front line and how close the crops were to the front line where they were fighting actively. And it was amazing. They were up to sometimes within only a couple of kilometres of the front line on both sides, still farming. I thought, you bloody brave bastards, you're on these tractors and headers and stuff within range, literally, just amazing. So
it's hard to comprehend, isn't it? We live in
it is
freedom. Like, that is unbelievable to try and consider.
It is incredible. Just a little story. When I was young and I worked back on the farm with my dad after I finished school, I was driving this old Super 90 tractor and blade plow. And they must have been practicing with the jets back then. I think it might have been a Mirage back then. That I'm showing my age. But he must have been flying down the valley where I was, and he came right over the tractor, probably 500 or 600 feet up or whatever, and boom! And I had my head, my sound phones on my head, and I just, the whole thing almost shook the tractor, right? And I I nearly soiled my pants, and as he took off into the distance, I think he did it on purpose, funnily enough. But in Ukraine, they would have been dealing with that sort of traffic constantly. It must have been terrifying, frankly.
Final question, if I could, Brett. If you were your 22-year-old younger self and you'd returned to a family farm 3.5 years ago, and you've enjoyed the optimism, but probably haven't had first-hand farm management experience of the 90s. What would be the advice you'd give to a younger you about what's playing out over the next few years and how best to handle it?
Well, I think probably made this point before. I'd probably make the first point, Jeremy, is that I love agriculture, right? So I'm always going to say, look, no matter what the situation is, if you're well organised and everything, you can power through it. It can still be exciting. It can still be fun. It can still be invigorating. It's a wonderful industry. I'm so lucky to have been part of it for such a period of time. I think the main thing is not thinking that just because you've come back in this period where there have been high prices, great production years, and everything's been going so well, to think for any moment that this might continue forever. We live in a commodity game. We're in a commodity game. When we put up big prices, when big prices happen in the market for whatever reasons, other countries, it's a global game. Other countries everywhere expand their acres. They try to produce more because they're making money too. And unfortunately, when the things are down, we've got to almost drive them out. We've got to be better. We've got to be more productive, more efficient than anybody, not just in Australia, but in America, in Europe, in Ukraine, in France, in Spain, in England or wherever. You can think about wherever. So we've got to think about that. We've got to be like an elite athlete. We've got to have all our nails. We've got to make the best we can out of the product, get it done most efficiently, keep our costs down as best we can without reducing the yields we're going to get, and be open to innovation. That's makes challenging for sure, but exciting in the challenge that it provides, I think. So I think the reality of what we're going into is for that person, for those young people that have come in, to be prepared for that and be invigorated about what they're going to do to survive and do well in that situation. So I think that's the context of it for that young boy or girl who's come back to the farm in this last 2 or 3 years.
Brett, I'm really grateful for your time and really thankful that you've been willing to share so openly about the intelligence that Market Check has picked up from, but also to be able to tap into your experience over 35 years and help us get a real context around how best to navigate these next few years as grain growers in Australia. Thank you so much for your time.
Thanks a lot, Jeremy. Very much enjoyed it. Thank you for asking me on.
Speak soon. And there you have it, folks. A very concise and a very pragmatic view of what's playing out for wheat, oilseed and grains growers nationally, and how the next few years are going to look for us. 3 clear messages from Brett, in my opinion. The first one is bunker down and get ready. The second one is careful being complacent and really make time and be proactive around how you're managing risk and how you're managing your marketing now that we're coming into a different climate. And the last one is to get organised. Look at your cost structures more closely, rationalise and consolidate where you can. Be proactive around stress testing the strength of your business model and make sure that your business model has the ability to break even in a decile 2 environment so that you're set for the next few years. And if that's all you do over the next few years, maybe that's good. Maybe that's okay, according to Brett. Brett, always great to connect. Really appreciate the work that you and Tom and the Market Check team do. Keep up the great work. And I encourage all of you, especially the grain growers out there, to jump on marketcheck.com.au and get the support of Brett and his team around your grain marketing. Thanks, everyone. Take care and bye for now.
Thanks for listening to another episode of the Profitable Farmer podcast by Farm Owners Academy. If you're new to this show, be sure to follow us. If you've been a long-time listener, let your friends know about us or come continue the conversation in the Profitable Farmer Facebook group. All the best as you grow your business and create your freedom farm. Until next time, keep being incredible.